I want to share with you 5 investment options which are a little high risk, and this is not to discourage you not to try them. You can actually get into them with the diversification mentality, of course, but you need to get in with a little caution. Especially if you're a beginner, you need to take your baby steps very carefully. Most of these funds could mean you losing your entire capital or principal. So please make sure you watch this all the way to the end. Don't use hearsay here and there and make decisions that could mean taking you back in the steps that you've made in saving or accumulating seed that you want to invest. Of course, with high risk comes very good prospects of good returns, but then there are so many other angles involved for you to be able to achieve that. Make sure that you're following or subscribe. And if you're learning, please make sure to leave some feedback behind. So to open us with our list, number 1 is shares. Hey, investing in shares is cool. You get to earn dividends, you join the investors class, and things look so nice. You own portions of a company. But if this is your first investment and you're putting in everything that you've saved over some period of time, you need to practice it with a pinch of salt. You need to take baby steps, because you'll put in your money, you get in your 100,000, your 1 million, your 10,000, put it all in shares, and that is all that you had. Shares have a tendency of sometimes becoming volatile. You could buy the share at 20 bob per share, and then the value goes down to 10 bob per share. That means you've lost half of the value that you'd put in. Of course, it is paper loss. You don't get to experience the loss until an emergency happens to you. And remember, this was all the money that you had put in. So if you're going to withdraw at that particular point, it means you're going to sell your shares, then you get to make a loss. That is where the high risk part comes in. Of course, sometimes you get in and prices shoot up, and you can as well make even 100% of capital gains or get to enjoy dividends. But whenever you're getting into shares, remember, it is a long-term game. Don't get in expecting that somewhere along the line you're going to withdraw your money. So the best way to get into shares, eka ile kidogo, a small portion that you are willing to let go, or you are not likely to want to access anytime soon, so that if things go in your favor, well and good. But if things go against you, uko safe. Number 2 is something that is very similar or close to the shares, and it is called equity funds. Equity funds, just like the name suggests, ni pesa yako imewekwa in shares, but this time haujanunua mwenyewe the shares. It operates the same way the money market fund operates. This time round, a fund manager is involved, whereby you give the fund manager your money and request them to buy units in the equities. So the advantage with that is that mimi ningeweka 10,000 yangu in Safaricom or in KCB, I will only get KCB shares or Safaricom shares. But when I give it to a fund manager, my money can be spread up to 25 counters, depending on how they want to invest the money. This is entirely a fund manager's decision. The problem with this is that they might spread or they might put the money in one place, but the same thing that happens to you wakati una invest in shares could happen to the fund managers. They are also human beings. So the share tunaweza weka ndani hoping that the share price will go up, but then things turn around and things go south. By the time they are going south, you will get negative returns on your investment. So if this was all the money that you had, you are likely going to withdraw if an emergency came, and you're going to get a loss. So if you want to get into equity funds, yes, they have their advantages, but remember, for you to be able to enjoy any significant returns, you need to leave your money there for like 4 to 7 years. That is the recommended timeline. And yes, as much as your risk is spread across different counters, but still again, it limits you from the advantage of getting to choose the best company that you can invest all your money in. So it has its positives and its negatives, but just remember, it does not run away from our risky category. The third investment option that I wish to caution you about is none other than REITs. REITs are real estate investment trusts, and this is an easier way for you to get into the real estate investment business without having the huge capital that comes with owning apartments, owning houses, owning properties. Yes, it is a cool venture. You get to join the real estate family, but there's a risk when it comes to rates. Of course, yes, their risk is slightly low, but then there are things that could affect your returns in that particular year, where expenses for that rate could be higher than the income that they received. Of course, there are so many things that affect rental properties or real estates, buildings that were supposed to be sold but were never sold. So all these angles get to affect you at the end of the day because your money is what is running that. So if the operational expenses are more than the revenue that they got from the rents or the flipping of land and selling properties, then you get to enjoy that loss as well. You are part of the income in returns in positive and the income in the negative. So this is also another risky area. If you put your money in, the risk is kidogo, yes, but you can still make losses. So this is not a place to put in 100% of your money, but you can get in with some caution as well. The last two are one of the highest risk where you can either lose your money overnight. And if you're learning something to this point, please make sure that you're leaving a like on the video and some feedback on what you'd like me to talk about in details. So at number 4 is Forex. Forex is an investment. People are making money in Forex. Not all stories about Forex are scams. I did a video to explain how Forex is an opportunity, but then it is a very risky one. You can actually lose a lot of money. Every broker that you sign in gives you a caution that 90% of people who put their money in get into losses. So by the time you're getting into Forex, as much as they always show you that gold shiny side of the story where people are making millions and they are withdrawing a lot of money and telling you how God helped them, approach this angle with a lot of caution because you might cry premium tears. And last but not least, to close our list is the crypto. Cryptocurrency has made so many millionaires, and they don't tell you that it has also made so many poor and losing millions and millions of shillings and dollars. So get into crypto with a lot of caution. Yes, it has that potential to make you a lot of money, but do not put all your life savings or all that you have earned into the cryptocurrency. It can make you very good money, but if you have to get into it, get in with cautious steps. All these are great, but have some element of more risk than where you could start. If you're getting started, take baby steps. Be careful, it is your money. You earned it with a lot of sweat. Do not let it fly away easily. Thank you so much for watching. God bless you. Happy investing and see you in the next video.